Okay, good morning. Morning, Frank. Morning, Mike. Hopefully you can hear me. If Perfect. Good. Thank you, Frank. Um, yeah, I don't know how many people we got here. This is mainly for you, Frank, who asked the question. I thought it's a question I kind of get asked quite a lot, so I thought I would try the YouTube live stream and see how we get on. So, just because people probably watch this more after it's recorded than now, um, just run through a few things. This is really about how I use some of the tools I've got to find levels that I trade off. It's just how I do it. Um, I'm not telling you you need to do it this way or you should do it this way, or even if this will work for you. But it works for me. It's how I do it these days. I don't draw any manual levels at all. I use mostly just tools because there's more than enough levels to trade without having to draw them every day. So yeah, just wanted to make a point of saying I'm not telling you this is how you should do it, but other methods don't work because they do. This is just what I do, and if you can take something away from that, great. Uh, in terms of relevance to how you trade, excuse me, I trade intraday. Most of my trades are pretty short term. Can be a few seconds, maybe 10 or 15 minutes, depending on the uh, actual setup. I don't use fixed stops or targets, so I'm not one of these people with an ATM that has 10-point stop, 5-point win. I trade structure within the bars and momentum. So depending what the market's doing, how it's trading, I put my stops and targets in what I consider to be logical places where I expect price to go. And because that changes all the time, it seems stupid to have a fixed target or a fixed stop. Obviously, if you change your stop, you need to adjust your risk. So again, I'm not telling you this is how you should do it. This is just how I trade after many years of finding out what works best for me. So I trade using my own tools. Most of the tools I've written, you may or may not have them. You may or may not be able to replicate some of this. Um, but these tools are what I use to get all my levels and entries and exits. Um, a lot of people ask me for specifics on uh, chart values, like how many ticks are your Renko and this sort of thing. It doesn't matter. What I've got here today probably won't be what's there in 6 months, so pay no attention to it. NinjaTrader requires that I tell you on all videos that you'll basically lose all your money if you do what I do. So don't do it. There is a disclaimer in my bio, and NinjaTrader will not like me if I don't tell you that. So happy to discuss pretty much everything you see on my charts in the next few minutes, but kind of don't necessarily expect me to tell you how to code it yourself. I'll give you some generals though. So this is just a friendly chat. I'm not promoting anything here, just sharing the way I do a few things, and if you get anything out of that, that's great. So, right, let's get started. Uh, Frank, I'll dive straight into levels. So this is not the screen that I actually trade off, but it is my sort of overview. This is my very high level sort of where is the market long term. It's a 4-hour chart with monthly profiles, and I'll look at this. all these levels here are pretty much HVNs, which you could very easily manually draw if you look at the peaks within a volume profile. Mine is all automated because HVNs change even intraday, certainly throughout the week and throughout the month, and I do not want to be drawing them all the time. Also, a huge amount of the trading that's done, I believe, day to day is automated. And I use algorithms to find these HVNs, which are probably the same algorithms that many other people use. So if we're all trading off the same levels, I know those levels are relevant. And being a monthly chart, we don't expect price to sort of just bounce to the tick off these levels. There's usually a sort of, depending on momentum, some deceleration or wicking. But if you look at the chart, you'll see there's normally reactions around the points. So that's my highest level. Then I'll drop down to a weekly chart, which is pretty much the same thing, just an hourly, weekly. VWAP here is very important to me. Weekly VWAP, particularly around Wednesday, I would suggest you watch it. We can have these weeks where there isn't really much going on, and the first couple of days of the week the market will try and find a high or a low, and then the middle it will go back to neutral, which will normally be pretty much to the tick, one of the VWAPs, and then the next couple of days we might put in a move in the other direction and so on. So NVPOC, again, this is weekly. That's a level that's very valuable to me. I've done some studies and stats and published some data on these in the past. How often they're actually tested after being left naked. And by that, of course, I mean your VPOC forms and we go off in one direction. Very, very high probability that we tend to come back and test those. They are great magnets. So that's that. And then I have a 1 minute Heikin Ashi chart. These magenta lines here are anticipated hourly ranges. All it is they're built up by studying past hourly ranges for the same hour over a week or two of prior data. And what that gives me throughout the trading day is an idea of the expected range. So if we're in the middle here, not a particularly great place for me to look for trades because I'm kind of more of a mean reversion and momentum trader. And right at the edges, again, I wouldn't be looking for trades because once the hourly ATR tends to get exceeded, and when I say hourly ATR, you can't use the standard ATR indicator for this because it assumes all the hours are equal, and they definitely aren't. So you need to compare hour for hour. So 10 a.m. today with 10 a.m. yesterday and 10 a.m. the day before. These are back tested quite extensively by myself. Sorry, let me just turn that fan off. And I know many algorithms use them, probably mean reversion algorithms, because this will happen where you will reach the limit of the range for the hour and you'll see the order flows change and the other side come in and profit taking come in. So if you're looking for mean reversion trades, these edges are quite valuable. Again, it's simply the range of, say, 10 a.m. today and the range of 10 a.m. the prior day and the prior day and the prior day, and then you just average them. And it will give you an idea of the expected range for the current volatility in the current hour. That's very valuable to me. My 74 range chart is a fairly high level chart as well. This is a daily profile. This runs some code I wrote called profile bars, and these levels here, um, these are in the settings. They're called liquidity zones, and essentially what they are is where significant trading took place. Let's put it that way. We'll look for aggressive delta, aggressive volume in certain block size trades, and carry a zone forward from those bars. And what they're created in real time. So what tends to happen is you leave these zones behind when price moves away from them. But as you'll see here, we tend to come down and test them quite regularly. We seldom slice straight through. Again, these zones are all played kind of heavily in context. So if we're trading here, I wouldn't necessarily be looking to buy off a zone that's immediately below. But for instance, here, if we come down a fair way and then come into a heavy section of demand, as it were, when price has been trending up, then might look for longs off it and so on. Daily VWAP, very important. Naked VPOC again for the day, very important. We have these green HVN levels here, which is exactly the same as these big green HVNs here in the other profiles, just a bit more fine-grained. Those are important. Those are just automatically generated off the volume profiles. And these lines here are actually naked VPOCs from inside the bars themselves. So 4,000 volume chart. Levels of this, again, exactly the same. We have HVN levels off the volume profiles, and here the volume profiles are actually split into 2 per day. So we have an ETH profile for the overnight and an RTH starting at 2:30 my time for the actual RTH. And we also have market profile as well as volume profile. So we have areas of rapid movement where not a lot of volume traded, singles as they're called, which I'll look at. This channel here runs all day long and is a simple linear regression channel, 2 standard deviations either side. That will fit quite well with price, and it gives you a pretty strong indication just if the day is moving up, down, or neutral, just because of its slope. And again, reversion trades tend to be at the extremes. Crossing the center line tends to be positive or negative, and that's quite well tested. Other algorithms are definitely looking at this and playing it, certainly using it for context. What else can we look at? I can switch down to my Renko. So this is actually my entry chart. It is a Renko chart running Heikin Ashi, and as you'll see, there's a bunch of levels on here as well. These are literally just fractal pivots. So a couple of down bars, a reversal bar, and a couple of up bars. The reason they're blue or red, and the reason for the difference in opacities, is how much volume and delta actually traded in those turn bars. The idea behind that being that a strong blue demand zone like this had significantly more aggressive and more buyers in it than a weakly colored one like this. So you wouldn't necessarily expect the same reaction off this one as you would off this one, depending on the context. And I don't actually trade off these for entries, but they are much smaller structure that I'd use for managing my trade and scaling in and out. Again, down the side here, we have standard daily volume profile, some text levels on here which are pulled off the other charts, VWAPs, HVNs, value areas, and so on. Down the bottom is a Heikin Ashi delta. This chart here, which also does the some of the coloring on this main chart, just gives me a trend bias. So essentially, if you're looking at green here all the way, pretty much only pullback entries long and so on. So more of a sanity check than anything else. What else can we cover? Are you still there, Frank? Do you want to know anything specific? Well, if anyone has any specific questions, just jump in and ask them. I can try and go over them. Yeah, there's a lot there. A lot of people kind of trade with just one chart. I find it very difficult to trade like that. So I've got a multi-monitor setup, obviously. I've got 4 monitors here. I have simplified it over the years, so that this is my main chart I'm looking at most of the time, actually, when I'm looking for trades, and then I switch down to that Renko when I'm actually looking to enter. So a couple things I just mentioned. I don't have, unlike most people, a very defined trading plan, which a lot of people seem to be quite keen on having. Market does what market's going to do, and you quite never know whether it's going to go up a lot or up down a lot from day to day, especially with all this news. So the only thing I really do is I do pay a lot of attention to the monthly profiles and the significant levels, but those are normally ones that are quite way out there. And I drop down to the weekly. I have a look, get an idea of how far away from the VWAP we are, how extended we are in either direction, and so on. And then I pretty much wait and see what happens, and all these levels will evolve in real time. So just looking at these few charts here to sort of just gauge what's happening, and then try and find entries around the action. Yeah, all of the levels that I get tend to be have some sort of data behind them, so they're all volume derived or delta derived, which is volume derived anyway. I don't really draw levels at all anymore. Occasionally I do draw on the chart, but it's more for sort of just context. A lot of the trading, I think, is algorithmic these days anyway. I've done a lot of research into whether these levels actually work or not, and I know from that other people, at least, if not other algorithms, are definitely trading them. So they're relevant. Obviously, they don't always cause reversals in price, but you will always see some interest generally around them. So these levels are all either from volume profile or from profile bars, which is just smaller volume profiles, and it's all based around volume. The liquidity zones, these ones, Frank, these are what I look at from day to day. I mean, there's more than enough to actually take enough trades to do okay on. So where there are no zones, I typically just I'm not engaging. If we have a move like this, I'm waiting for a zone to form, for price to come down and either test it or break it. Or if we get very overextended, one of my common plays is to play back to the zone. These zones are magnets. They're very seldom left untested. So they're, even if you don't use them to form entries around, they're excellent targets. You see on my chart, I've got some different colored bars here actually. These are significantly aggressive buying or selling occurring in these bars, depending whether they're cyan or magenta. Again, it just tells me if there's a lot of colored bars in this area, there was some aggressive participation, whereas here we just have a run up. There's no point engaging until we get back to a level where bigger traders have participated aggressively, because you don't want to be the 20% retail traders trading in the middle. So VWAPs, again, volume derived, very important. Singles, time derived, but generally very low volume areas. The other thing I'll just mention with those, quite a big part of my trading uses Heikin Ashi. I've got it on a 4,000 volume chart here. I've done stats on this as well. Where you get, let me just make that a bit bigger. Where you get large single Heikin Ashi bodies like this, these are pretty much LVNs volume wise. So this is just another way of looking at it. But you'll find LVNs have a very, very high probability of being retested. So we take off here, I actually call them takeoff bars in my head. So we take off here, we're a bit extended. You definitely shouldn't play just for a reversal. And again, I'm not telling anyone how to trade. But if price were to start coming back, almost certainly these are the areas that will be targeted. And if you were to actually go by hand through the chart and count them all up, even though they wouldn't be all traded back into immediately on the next swing, you pretty much guarantee about 95% of them will be cleared off at some point. And they make for great pullbacks, especially if you have, for instance, here, where you have a HVN, which is actually the VPOC for the RTH session in this case. We fly through it, we hit one level, where do we come back to? Certainly fix this structure and into a prior HVN, and continue up. So Yeah, those are the levels I just look at and play all day, really. If I just flip back to my entry charts, the other thing I look at on this chart, which won't be super easy to see, but you do get used to it, when I'm actually in a trade and watching how the action is progressing. One of the things I do is watch this chart, and these are Heikin Ashi bars over top of Renko bars. And if you look very closely, you'll see some of the bars have what I actually refer to as deformities. They're not clean. There's a little wick on some of them, and the bodies are separate sizes. But that's actually where a little more trading, little more volume, maybe a little aggressor in the opposite direction came in. And when you're watching price at this tiny level, what you'll notice is pretty much every single pullback and pivot on here, if you trace it back, will be to one of these prior deformities. So here we pull up, we test one of these little wiggles. And this is really down at the micro level, so I'm not expecting everybody to really do this, but it gives you, if you do watch it and can get used to it, gives you an extremely good ability to be able to sit in a trade and know that even though price pulled back against you, for instance, that it's actually still doing the right thing. Because if you see price come up, just tag one of the deformities. That's totally normal. And then if it comes back down in your favor, that's actually a very good sign. That's even a stronger short than it simply whizzing all the way down to your point. And on these pullbacks, I might even add. Depends on the context, depends where the next stop is. For instance, if we were going short in here and it pulled back to here and it continued down, again, you see a little deformity here as we hit the prior low because buyers engaged slightly. But I might add here, but the place I would be trying to get out is at some structure, which will be one of these levels, which if we go left, we'll find it somewhere. The other thing I just mentioned on this structure chart, same as when we're looking at the bigger Heikin Ashi bars, these legs, which are the big Heikin Ashi bars that get filled, if you look at them on this chart, they will very often fill down to sort of that level. You get to about 50, 75%. And again, that's completely normal. So if you come down 50, 70% and continue on in the direction you're going, that's actually a good sign. So yeah, if you can watch those for a while, you get a very, very good sense of how the market moves. And it's always engaging volume at some point. So I guess that's really it. The only other things I have, a couple of moving averages, just as a big bias filter. These are actually, despite them saying SMAs, they're not SMAs, they're signal filters. So slightly sort of more modern way of doing an average that incorporates velocity and time rather than just price movements. So these are just I know that this particular type of filter is used by larger algorithms again because if you watch the order flow as we tend to cross them, there's significant in and out flows. So again, they're just things that are proven to have relevance by watching price over a long time. The range here you see on the chart, 3 p.m. range. That's my basically first hour of the day RTH session. I don't actually trade that. I just added that one on because I saw someone else trading them. So I can't tell you how I trade that yet. The only thing I'll say with regards to ranges is the opening 5 minute range. I track every day and trade, and that is very important. Um, so basically, a bread and butter trade for me in set of levels is that opening 5 minutes. The only thing you need is the 5 minute high, the 5 minute low, and the middle of that. And what you will notice is about 2 minutes in, whilst it's forming, we will normally come back and hit the mid if the market is undecided, which makes for a good daily scalp. And later on in the day, particularly around the EU session, what you're looking at is some probably reversion, especially if there's been no significant news or no big event pushing the market one way or the other. So as the EU begins to close, and it can be sort of an hour either side, people will dump stuff that's been accumulated, or profit take, or rebalance, or whatever they do. And the targets will be normally the first target to hit here. So this one here is a VWAP as well, but this is the US session only VWAP. This VWAP here starts on the UK session open, and this one here is the 24-hour US session VWAP. And what will tend to happen is we will come back, depending on who's driving the market, and hit one of these top two. We don't normally go through all of them, but it gives you a very clear target once the reversion has started. So you could look at this channel slope and see we've been tagging off the center. We've broken down and started trading below the HVN, and our first logical target for me would be the first mean, which will be one of these two levels. Yeah. So there's a lot in these charts, probably too much for a lot of people. It's less than I have had in the past, certainly more than when I began. But this has been my stable setup now for quite a long time. I haven't really changed it much at all. So more than enough context in those charts to find a handful of entries, good entries every day normally with a bit of volatility. So I hope that gives you a few ideas. If you got any other questions, let me know. Yeah, no problem, Frank. It is a lot to absorb. It's a lot more than most people use. I need to have a little bit of context behind why price bounces off certain levels and things. For me, that's volume, and I need to see it. So I need to have that confidence for entries and exits. Also, it helps me, if I'm exiting to actually find those exit areas. Exits are probably more important for me than entries, to be honest. But yeah, if you watch it for long enough, it does all sink in. And some of these things, like the big bars on Heiken Ashi, are something that most people, including myself, looked at for years and didn't really twig some of the price action that actually occurs in them, like these little pullbacks into the LVNs. And they are just LVNs, low volume areas. You're just looking at them in a simpler way, another way, make them easier to see. But yeah, the 40% is a good one, actually. It does work. I just find that the Heiken Ashi like this on a separate chart, if I'm looking at it time-based, for instance, with this massive area down here, I think, again, almost certainly we have wicked into it here. But if we do come down next week, probably in here somewhere is where we're going to test these areas. Even weeks later, when you look at price coming down and you're thinking, well, where's my target? Where am I going to get out? Where does it make sense? And here you look at these bits. A lot of people look at the lows and the highs, but I find that those aren't very valuable to me. If you look at pullbacks on non-time-based charts, you nearly always see the pullbacks come down into the first stage of acceleration out. Presumably that's because that's when the big orders began. But it's a very repeatable behavior. It's been doing it for a very long time. Yeah, weeks. The thing with mapping these areas out is you can be trading and looking at looking at price going up here, for instance, and thinking, why did price stop there? Why would I get out there? But even though we can't see it, and I haven't looked, if I draw a ray back to the left and then scroll left, oops, come on, turn my scaling off. If I keep scrolling left, follow the cyan line, hopefully we're going back many days now, of course. Where did we hit? But we hit the acceleration point, which is I was just talking about, the top of the swing in the Heiken Ashi. So this one had actually already been tested, but you can repeat that exercise again and again, not having seen the sort of origin of where you suspect what caused that event. But nearly always, if you scroll back, you'll find it's these Heiken Ashi bars, the initial takeoff points, they just get tested again and again. And again, it's probably just because that's where decisions were made by much bigger players. So there's no point, for instance, taking an entry or an exit unless it's sort of jumping on some sort of momentum in the middle of one of these, because price is it's not going to stop there. It's going to come up and test a bit higher or reject down now. My Heiken Ashi is a little bit different from NT, but not significant enough for this to not work. My Heiken Ashi has a ton of options in it, whereas the NT one is just plain Heiken Ashi. The one thing that the built-in NT Heiken Ashi does, which messes up the bars very slightly, is Heiken Ashi relies on averaging price to form the bars. The NinjaTrader 1 rounds everything to tick size before it actually does the calculations, which means you can be a quarter off. and it can just make for some odd looking bars now and again. Mine doesn't do that, so the bars tend to be a little bit smoother. Also, the NT one is a bar type, so you actually have to set it in the data series. So you've got Heikin-Ashi or not. The downside of that is you can't put Heikin-Ashi over the top of all sorts of bar types. So you couldn't put Heikin-Ashi, NT Heikin-Ashi, native Heikin-Ashi on top of a Unirenko chart because it's one or the other. Whereas mine is an indicator, so I can put it over the top of anything I like. The other thing that mine does, which I don't expect anyone here to use, but I use, I have some algo settings, and for me, for instance, when the Heikin-Ashi is running, it actually signals other bits of my system to say Heikin-Ashi is going up, Heikin-Ashi is going down, Heikin-Ashi has a big bar, Heikin-Ashi has a small bar, all that sort of thing. Also, if I do trail stops, sometimes I trail stops like at the open of a Heikin-Ashi bar as I'm going up, normally a couple bars behind. I don't do trail stops that often, but sometimes in volatility, it can handle it faster than I can move things around. So that's quite useful. Yeah, so my Heikin-Ashi has a bunch of different formula options as well for some smoothing and so on. And one of the, let me just flip back to the other chart. This down the bottom here, this bottom pane, this is a core part of my trading. And this is actually Heikin-Ashi derived. It's the Heikin-Ashi indicator that drew these bars that's also drawing this, which isn't NNT, and it is just an oscillator. But as you can see, we get periods of green, periods of red, periods of green, and so on. I'm not particularly good there because it's the end of the day on a Friday, but it keeps me out of trouble. And it's a sanity check for me. For instance, I'm looking here, say I am looking for a reversal long out of here. I know statistically, because I've tested it over years of data many times, that me trying to get in down here at levels is kind of gambling on if it's going to turn or not. If I do the simple thing of waiting for this to actually go green, or at least almost green there, and if I've got 3 greens, even better. It's just a sanity check to say I would be absolutely stupid to apply a short anywhere in here, and that's the biggest thing. This Heikin-Ashi delta down the bottom has saved me from my own stupidity many times in the past. It's basically a momentum indicator. It looks at Heikin-Ashi body sizes and smooths them, but it will keep you right side, and it's probably one of the only indicators I've ever tested out of a lot of indicators that if you simply trade long green, short red, in most market conditions, you can come out above break even. So yeah, Frank, I think we all can. We've all done it. But for me, as I say, that is a very core part of my trading. In fact, if you look on the right here, I have long and short buttons, and they're actually tied into this and just a few other things. And it does just mean in the heat at the moment, if we're falling through the floor or sort of flying to the sky, if I decide I want to do a counter trade and I see an area where I believe price is going to sort of engage in reverse, rather than take the emotional decision to say, I think price will do this here, I'll enable the long or short button, and it will actually only let me put the long or short in when these indicators actually agree. Of course, you don't need that level of automation, but just the fact that this is green from here to here and turns red, it's it saves me a lot of heartache. I don't trade specifically just sort of red green, that would be silly, but if you engage it around context of levels and things and what's happening, pretty much a trading system in itself. Better than a moving average anyway. These other lines on here, they're volume derived. So they're kind of just, they're also oscillators. This one here is the Heikin Ashi, which is the main one. These ones here are volume derived. The importance of those on a very short time frame Renko chart like this is that, as I say, pullbacks to the anomalies in the bars, like you can see the little anomaly there, maybe just, we pull back to it, we test it, we continue. Those pullbacks are entirely normal. They are not reversals. They tend to occur because if we move up fast here, the volume has all been cleaned off the books and there's nothing to stop price coming back down. So we come into an area like this. We can pull back to the first anomaly very quickly just because there's nothing to engage with here at all. Doesn't mean there's a bunch of sellers selling this. It just means either liquidity's been pulled or a small amount of profit taking happened or something else. So again, this isn't a negative sign at all. But one of the ways I look at these very short-term frame charts, because they can have very little volume in them, if you want to tell if a reversal has any substance behind it, you see like this down move here to test back to here. These volume oscillators continued to trend up. And a lot of people can be shaken out in a move like this. Me, if I'm looking at this, if I did happen to be long there for whatever reason, as I say, I don't have fixed stops, so if this traded back to here and these are going green and still climbing, I'd actually be very happy to add in here with my stop still, down there. But you're adding with very little risk because you're closer to your stop and your original target is still exactly the same. If you've got this sort of picture, it just means the pullback, it really wasn't much traded in there at all. And you'd see it on the profile bars a lot clearer. And if you look at both pictures, one of the good ways to do that is up here on the chart. If you engage the global cursor on your two charts, one with the profiles blown up and one on a chart like this, and then move around. Yeah, Fibonacci, I do look at it from time to time, and definitely the prices tend to correspond sometimes with levels in the fib, but I've done a bunch of experiments, including things like simply drawing random lines like this on the chart, then going back and saying, hey, look, this bounced off here, this bounced off here, this bounced off there, those levels are relevant. You need to count all the times it wasn't relevant as well. And the one thing I can say, Fibonacci does certainly line up sometimes, but if you look at it on this tiny granular level, when you do see the fib bounces, there's probably another reason for it. And again, not saying it doesn't work. Some people probably make very good living off it. But I like to say, well, there's an anomaly here, and yes, it happens to be 50%, and yes, it happened to be a trend change point. And a ton of volume went off there. You can see down here, this aggressively climbed, which means volume actually poured in here on the up leg, which tends to either mean one or two things. The start of a change of a trend, or exhaustion at the top. And we're not at the top, we're at the bottom, and it happened here as well. So people are beginning to fight back in the other direction, and with some decent size. So yeah, I'm not saying fibs don't work, and I do occasionally chuck them on things, but I'm certainly not trading off them or looking at them. And if I look at the pivots and I look back, every single one of them will be a little anomaly like that here. Normally, I would say, I mean, even look here, a little anomaly there, wicks. These aren't necessarily tradable, but you will, if you watch them at this level, and it's a great learning thing to watch them at this level, you will see price interact with them. On the profile bars, obviously, you got the full profile, you see it even more detail, but yeah. You will see there's normally always a reason, and wherever you have completely clean set of bars like this, you just, that's not a place to engage. Yep. Yeah. I mean, my mind always wants a reason for why something worked or didn't work, and hard for me to commit the risk if I don't have the reasons, and this, valid or not, gives me those reasons. So, but again, if you look at this chart, you will just see the little anomalies and the way price bounces between them all the time. And essentially, when I'm in a trade and managing it, and I'm sometimes adding, sometimes taking away, I'm watching these anomalies, and if we can't break through them, it just means the sellers are here keeping, adding to their positions on the way down. If we do start breaking through them, coming back, testing them, and then moving back up the other way, I know the trade is done. Yep, I always want to know why. And I have all the little scenarios in my head as to why these things happen, and may or may not be exactly why these things happen, but it gives me a picture. Yeah, Joe, it's part of my Heiken Ashi indie. So it draws bars like this, but it also plots the this big one in the middle here. You don't see Heiken Ashi Delta discussed much or used much, but it's been a core part of my trading for quite a lot of years. So, as I say, back tested, it's one of the things that works better for me than most other things. Oh. So there we go. PGS Heiken Ashi, Joe. Okay, no worries. I hope it helped. Probably give you a ton of things to look at and play with. Don't try and do it all at once, because it's too much if you haven't got that level of inputs. You'll get cockpit overload, but perhaps incorporate one or more at the structural level. And then one of the most valuable things I ever did was figure out this with the anomalies and the way price moves. This helps you stay in a trade, helps you know when it's working, when it's not, when to add, when to get out. Makes a huge difference to me at the end of the day. Have a good one all. I hope this helps somebody. Cheers.